It's unreal to think that it's been 1 month so far since the real estate market began to change in light of the pandemic. So, what a month it's been. And I don't want to sound callous talking about housing right now, but a lot of people are wondering, hey, I need to make some decisions about what to do, and I'm not sure about the market. And so, there's a lot to talk about. This will be about 25 minutes or so. I hope it'll be helpful. My name's Ryan with SacramentoAppraisalBlog.com, and let's jump into the numbers. So, what I find interesting first, as we begin to look at stats, is that what we're seeing happen in Sacramento, it's actually showing up in many markets across the country. Okay, so here's a chart that shows data by weeks, and you can kind of see that the number of new listings has clearly declined through time. Okay, listings are down 33% compared to where they were the first week of March, or pendings are clearly down. There's been a downtrend. They're down 40% from early March. Cancellations and holds have a similar dynamic in that we saw cancellations and holds increase exponentially, and they've begun to taper off just a little bit since then. Okay, so now let me show you all of these stats in this chart visually. Okay, here's what new listings look like by every week. And what's normal in a market is for listings to keep increasing, but we've seen a difference, a change. And so this past week right here, represented by this up and down of daily listings, it's down 33% from early March. Okay. Now it's important to realize that there are 476 listings this past week. And so I think it's easy to read a headline and think, oh, the market's at a standstill, nothing's, coming to the market. But I think there's the buyers who are willing to play the market right now. They're watching listings going, hey, this is great because I do have some options at least. Here's an interesting way to look at it though. Let's see, 2020 listings in red. Okay, this is the graph I just showed you compared with the same time last year in 2019. So this we kind of get to see that what would the market maybe normally be doing, an increase of listings. And you can see this second week of April where we were down about 43% compared to last year at the same time. And so we're definitely down 33% from a few weeks ago, but I think the real trend we would say, wow, we're down more significantly compared to what would be on the market. And so, if anything, inventory still feels sparse. The number of listings out there, it's just been anemic even before the pandemic. But I think that we're experiencing that, and it kind of feels more like that today for a lot of buyers. Okay, properties with the hold status, there's been 543 since March 12th. Now, March 12th, I would say, is our coronavirus day where all these events started to cancel and where things really started to change. Okay, so here's March 12th, and you just see a real uptick, especially starting the 15th and 16th. Okay, 462 cancellations since March 12th. And really, there's been 1,005 canceled and hold listings since that date. So, how incredible is that? This is uncharacteristic. It's not normal. We should definitely not have all of these cancellations and holds. But what's interesting to consider is that what are we going to see happen with these properties? And in coming time, and will they hit the market? Will they flood the market quickly? What are sellers thinking right now about what they're going to do? How many will continue playing the market? So here's pendings, and since early March, we've seen a dramatic decrease where pending contracts are down 40% in the Sacramento region. All right, so very significant to watch. Here's a different way to look at that. There were 354 pendings this past week, up very slightly from last week, but down very clearly by hundreds from several weeks back. And so there's been a very noticeable difference in the region. For some people who say, hey, the market hasn't really changed, I would say, no, no, no. It's not I'm not, here spewing negativity. I would say that these are market facts. We've clearly seen the market change. All right, and it's a market that we have right now. And yes, the market is suppressed because of the pandemic, and it's to be determined what we'll see happen in the future when sheltering in place lets up, when people have full access to real estate. But this is the real market in front of us right now, whether it's suppressed or not. This is our market. All right, here's something to watch. Here's listings, new listings since March. Okay, and new pendings since March in black. And so you can see the listings in green versus pendings in black. There's almost always more listings than pendings. That's a normal dynamic. But what we want to watch is the gap. Okay, and if we begin to see the gap between new listings increase compared to pendings, that's going to soften the market. Okay, but one thing we have to consider is that when we watch the market, it's not just about new listings versus pendings because there's a lot of listings that are still on the market. So I'd say that it's about the new and everything else versus the pendings. And so if pendings slough, then yeah, the market continues to soften. One thing to note, especially for real estate professionals, a quick side note, the 24-hour market watch in MLS, I would say that it's interesting, but it's really not very meaningful. And so I just want to remind us to be careful about reading too much into this because these numbers can change drastically depending on the day we pull them or even the time of day. And so numbers don't mean anything unless they're compared to something else. Okay, numbers without a context just don't mean very much. All right, and so let's consider that when we share stuff and when we tell a compelling story of the market. All right, so here's a brand new graph. These are weekly sales in the Sacramento region. Here's early 2019, and the market sort of peaked, and here's the summer, and then we saw less sales in the summer. And this year we are seeing a very normal trend. We've seen sales increase. Now, in a normal year, we should see sales continue to increase, but what we're poised to see is to see sales volume decline because of the pandemic. If we have 40% less pendings right now, that's going to show up in the stats over the next couple months, and this line is going to look either flat or down compared to what it should be. Okay, so something to watch. Here's a different way to show it. Um, Here are 2019 sales in green and then 2020 sales in blue. Okay, and it looks fairly normal, even though March was definitely down compared to March of 2019. But I think what I want to hone in on is this week in blue, this past week in April compared to April 2019, the second week of April. We are down almost 32% in the number of sales. And so we're starting to see some pandemic data, even though very few sales actually got into contract in March that have closed, but we're starting to see some closings where yeah, volume is shrinking, and we would expect for volume to shrink. Okay, if you work in real estate, this is really important to watch because this represents your livelihood, and it represents you needing to work really hard to diversify, to serve more than ever, to connect with people, and probably to cut expenses, to remain afloat in a market like today. Okay, the median price in the region rose from 425 to 440 last month. But I've talked about this before in a few other videos and lots of Zoom calls recently, but we just have to remember that March sales represent the market from February and January for the most part. Okay, technically 83% of all properties that sold in March got into contract February and before. And get this, 2.9% of all sales in March got into contract March 12th and onward. And so really we have about 3% of data from March that represents the pandemic. And so it when we look at these numbers, these glowing, sexy price figures, they don't really tell us anything about the pandemic. Okay, 54% of March sales had multiple offers, while 43% of pending since the lockdown have multiple offers. And so this is key because we had a much more aggressive market in January and February. And so, this number was really up there. All right. But when we look at current pending since March 20th, it's a much more subdued number. Now, I think that this would still surprise people that, wow, 43% of pendings have more than one offer. That sounds more aggressive, okay? Technically, this number, 54%, or whatever the number is, it should keep increasing through April or maybe May and then decline. But right now, we essentially have about 20% less multiple offers compared to previous months. So there's been a definitive difference, even though this number reminds us that the market's still competitive. All right, here's a number of multiple offers since sheltering in place. I'll let you kind of pause this and look at the number of offers and what percentage of properties are getting offers. I don't want to unpack this too much, but I just do want to note that there's still a healthy dose of properties, 57. 80 plus percent who have, 1 to 3 offers. Okay. But sellers, look at this. Here's, 2.8% of all pendings have multiple offers right now. So don't be that seller who expects to get, 5 offers when 3% of the market or less has that right now. All right. When will we know more about prices? My realtor friend Julie Reardon asked, or responded to a question I asked on Twitter. I said, "Hey, does anyone have questions for my future video?" And she asked me, "Well, tell me about prices." And that was the one question where I said, "Well, I don't have an incredible answer right now." And then she was like, "Well, hey, you asked, but here's what I do have to say." All right. So the trend shows up last in the prices. This is really key because I think sometimes we look to prices to tell us about the market, but prices are the thing that are affected last. Like right now, we're seeing a big change in the listings and the pendings, and eventually what we're seeing happening in both these areas will show up in the prices. It's just too soon to really see that in the prices. Okay. It's like you- um, uh, planting a garden. Okay, you don't see the result immediately until maybe a month or two down the road when this starts sprouting up. Okay, similar dynamic. Okay, we'll know a little bit more in April and then much more in May and June. Okay, my sense is that in April we'll definitely start to get more pandemic data. Okay, and then especially in May and June when you look back and go, almost every property got into contract after March 12th. All right. It's possible for prices to remain at a similar level, even though the market is changing. And so this is really key because sometimes markets don't change quickly. And we have a market where you might see among the existing buyers, you could see, properties moving at a similar level. And so it can be very deceptive of the change that is happening because we look and go, okay, prices aren't that affected. All right. And so watch that carefully, but know that in 2005, when the market began to crash in Sacramento, over 1 year, we saw inventory triple. You saw sales volume dropped by 40%. And so the market was in major trouble. Okay. But here's the thing, over that same year, the median price in the region was down 5%. And so you could literally look and go, yeah, prices are down a little bit, but the bigger story was no, sales volume was tanking and inventory was out of control. You just hadn't seen it show up in the prices yet. So be careful about how much attention you put on prices today. We'll see the trend first in the listings and the pendings. Sorry if I'm beating the dead horse. Okay, so be careful about less data in neighborhoods. If you're pulling neighborhood stats, I just really caution that if we have a market where we have, say, a 40% dip in volume as of now, then you could really be looking at the market last year and comparing it to this year, and you might get some really wonky stats if you don't have enough in the neighborhood to tell the story of value. And here's the thing, if there's less properties that eventually sell at the $1 million level because of, jumbo issues, to be determined on that. But if those aren't in today's data, that could influence the numbers. And so we have to be really careful. It's like we have to be able to talk around why the numbers are the way they are today compared to the past. Okay, this is a market that I think makes real estate professionals have to rise to the occasion. You have to master the numbers. Sales volume is actually a bigger deal than prices. Okay, I know I can get shot for saying that, but we obsess so heavily over prices, but the bigger picture is what is happening with volume. All right, and that'll eventually show up in the prices. The last but not least, we just need to look for clues for price reductions, more concessions from sellers, less buyers willing to buy, more listings, even less multiple offers. As we see these things happen in the market, they're clues that okay, the market's getting softer, and the softer a market gets, the more power buyers gain, and then we would expect for prices to be changed in the future then. Okay, here's an interesting to consider history. This is Len Kiefer. He's an economist with Freddie Mac, and analyzing historic rents and prices around pandemics. That the sense was that in this new study that came out that house prices fell about 5% and rents fell about 3%. Okay, and here's what I mean when we're looking at history. This is actually fascinating. Here's Amsterdam from 1550 through 1700, and here's Paris from 1820 to 1850 or 60. And so I'm not saying that our market has anything to do with these, but it's fascinating from a historical perspective to look and go, hey, on average, prices dipped 5% during um, a pandemic, and rents dipped 3% during a pandemic. And so I think that we can look at something like this and go, hey, if we have 16 million people in the United States that have filed for unemployment, and we have some real issues, we don't know how long this pandemic will go, but would it be reasonable to expect prices to show a difference? I think the answer is yes, but the market hasn't happened yet, and we have to be humble about knowing the future. But I think when we look to history, we go, yeah, it's probably realistic to see changes in prices at some point. Okay, here's something. And speaking of changes, September 11th in our market, I made this about a month ago. I just haven't found time to share it yet. But my sense is that September 11th happened, and a lot of people are comparing, what's happening right now to 9/11, but I don't think that's a great comparison, and here's why. So 9/11 happened, and normally the market around September starts to sort of slough anyway, that, as people go back to school and there's just less eyeballs on the market. But my sense was that what happened immediately in the market is that it took about a month or so of pending contracts off the shelf, where some people were hesitant, they backed off, and then the market sort of had its seasonal dip and then got back to normal. Okay, and so there was an effect on the market, but it wasn't drastic. And so I think that in comparing September 11th with what's happening today, I just have to say we'd have to admit that today is at a much bigger scale. A lot of people during 9/11, some people might not have purchased for a few months, but we're looking at a market right now where some people are going, what's my job situation? And what's the outlook for the economy in the future? And like I said, there's 16 million people who have filed for unemployment. And so that's a much bigger deal and a much different story than here. Like my friend Jonathan Miller says, he's based out of Manhattan, a renowned appraiser, says, the thing about 9/11 we have to remember, there was a September 12th and a September 13th and a September 14th. And so we have an isolated incident here. I would say that today is maybe a different story. Okay. Overpricing during a pandemic, I've seen a ton of sellers overpricing still. Here's a few things to consider, sellers. Buyers are already picky about price. Before the pandemic happened, buyers have grown incredibly finicky. They want to pay a fair price for a home. They do not want to overpay. And so know your buyers, know the psyche of where buyers are coming from. The pandemic, in my sense and judgment, is that the pandemic will only inflame this finickiness even more. Okay, buyers have been feeling hesitant about the market. I can't tell you how many calls I've been getting and emails or DMs where people are saying, hey, I'm in contract. I'm not sure I want to stay in contract. All right, so buyers are picky about paying the right price, but they're also picky about staying in contract. And so know your market right now, okay? People are tightening their finances, okay? That's what people tend to do during a recession or when the economy takes a dump, and that's exactly what's happening right now. I don't know about you, but I looked at my homeowner's insurance and my auto insurance, and I'm definitely going to be switching over these next few months when I find a better deal. Okay, it's a market of tightening finances. Okay, why wouldn't we want to do that? All right, the pool of buyers willing to buy during a pandemic is smaller. We've already seen this with a dip of 40% in contracts. Okay, if someone wants to buy, they would definitely buy. Okay, and so you have to price it right during this season where I think the market is a bit suppressed because people don't have full access to real estate. But it's not that they just don't have access, it's that they're in some cases not willing to buy. Okay, Mike Del Prete makes that thought really comes from Mike Del Prete, but it's a real truth. Okay, listings that are not selling are not your comps. Be really careful. Don't price according to other overpriced listings. Okay, I know it's so hard to look at, John down the street and go, my house is better, my house is bigger. But if John is overpriced, he doesn't set the market. If the market isn't biting on his listing, then don't price according to him. If you overprice, what you're essentially doing is you're helping other properties below you sell. Okay, so do you want to help them sell or do you want to sell? And last but not least, things are changing with mortgage lenders. And so in your price segment, if things began to happen and lenders require more scrutiny or higher FICO scores for FHA, or jumbo loans are a struggle, then you just have to know what's happening in your market, because that could soften things and cause you to have to price even lower. Okay. Um, so skip that slide. So the mindset of sellers. So sellers, some are going to list as soon as they feel safe. Okay. Some people are simply off the market. They're on hold status, or they've canceled because life has changed and they're not going to re-engage in the market until they feel that things are safe, or they feel that, okay, I can have people come through my home, and then I feel confident about my, going in other homes, and I can get something. I have a place to go. Okay. Some won't come back on the market though. Plans have simply changed. Finances have changed. The economy has changed. Confidence levels have changed, and they're saying, I'm out. I am not going to come back. All right. Some might try to list to beat the crowd of relisting though, and so there will be some, and I've heard from some agents of that happening already, where people are looking, going, well, there's 40% less pendings, but people are still buying. There were 300 plus last week. I want to try to be a part of those 300 right now rather than in the future. Okay. Some sense that the top is near and want to cash out towards the top. Okay. I've heard this quite a bit lately, and I think that it's very real dynamic. And so if the market did start to turn at some point and prices began to slough, I would think that some sellers are going to rush the market. How many? We'll see how many, if there's a mad rush or not. But something to really watch, and especially for realtors, be there for your clients who want to, try to cash out. You just have to price right though. Okay. Some sellers need cash, and so they're going to be dumping second homes, or maybe getting rid of an Airbnb that's not performing right now, or maybe just wanting to diversify and take properties in a certain area and then buy in a lower price market, or to do a 1031 exchange. Okay. Remember, 1031 exchanges increase during an increasing market, and so people are moving money around today. Okay. So pocket listings are the hot ticket right now. And so these are listings that won't get listed on MLS, but they will be out there and being sold with an agent, but technically not marketed on MLS. I've seen a lot of this, especially on Facebook. And the thing is, I think maybe some sellers feel like they can maybe control access to the property a little bit better, maybe be a little bit more choosy. We'll see, how much of a trend this is or not. If it does increase, I would expect that it would subside when the pandemic goes down. So, one thing for buyers, here's a graph of price cycles in Sacramento, and you can see prices over the past 40 years. A few things to really look at here. So, we see that prices were down in red here. And really, the past two down cycles, they took about 6 years for prices to go down. Okay, and so this is important for buyers who are looking at the market and they're just thinking that, hey, I'm ready to score the deal of a century. I'm ready to buy at the bottom right now, but prices don't often decline so rapidly that you see a huge difference immediately. Now, it's possible for that to happen, okay? And also, during a price cycle in the 90s, we saw about a 10 to 15% dip in value. And then, really, the median price in Sacramento County in 2005 to 2012, it dipped by 59%. And so this was an enormous dip. But remember, this is sort of an anomaly, and there's no guarantee that what happened last time would happen in the future. Okay, so buyers, I would just say, be discerning about your perception of the market. I would say to make sure that you're not making that mistake thinking the market's going to decline right away, because it could be 6 years out. Okay, if the market did turn and we enter a new price cycle, there's no guarantee that it'd be 6 years, but it could be a number of years. It could be longer and shorter. We don't know. Okay, so just be aware and respect the price cycle, but just realize this too. If you are concerned about the market going down, the reality is that no matter where you are, prices are going to decline. And so it's like my friend Mike Goby says, he's a realtor with KW in Roseville. If the market goes down, where do you want to lose? Where do you want to ride the market down? Okay, I think that's a viable, really honest question. Sometimes we're so worried about losing, and even though equity in homes, it doesn't mean anything unless we actually do something with it. But we're so worried about losing that we're missing the big picture of Where do we want to be? Where do we want to live? Okay. The number of REOs in Sacramento County has pretty much bottomed out, 1.3% over this past quarter. Those are bank-owned sales, and short sales were 0.26% of all sales over the past quarter. And so, look, there's a lot of discussion today about the market's going to see, more foreclosures and short sales, but I think we have to realize that, look, they've pretty much bottomed out. We will at some point see more. In fact, last year in 2019, we saw slightly more than 2018. So there's already a very slightly increasing trend. Okay, 1.1% to 1.4%, that's hardly anything. Don't write home over it, but technically increasing. But look, if we do have a lot of notice of defaults coming down the pipe, so first of all, if you're in real estate, please don't salivate over that, okay? It's just a bad look. But secondly, we have to realize that this stuff takes a long time, especially if someone asks for forbearance. They go through 4 months where they're not making their mortgage payments. Then the foreclosure process is on top of that. It's going to take many, many months. Sometimes it takes people in these homes for years, okay? And so I wouldn't expect for immediate results here. And think about short sales. We've had 8 years of price growth. If people are struggling financially, my hope is that they would be able to sell their home and then hopefully have some equity, all right? Because they wouldn't be underwater right now because prices have been up, okay? The buyers who are, or the owners who are most vulnerable are people who put very little money down. And so your FHA buyers, who, if you do FHA financing, you put 3.5% down, and the next day you try to go sell, you're in a negative equity position already because you can't even handle, the real estate fees, to get your property sold. And so let's be looking out for those and be sensitive to where, certain buyers in neighborhoods might be struggling and just serve them well. Some closing thoughts. Let's make this quick. I know this has been long. The market will keep changing. That is just true. We can expect change to happen in the future. Today is April 12th. What I'm saying about the market today could be way different than what I say next month. All right, there's new factors to consider every day. Secondly, don't judge the entire market based on one listing or sale. Okay, I saw someone on Twitter this week who saw in a high price market, actually in the Bay Area, who said it's beginning to happen and was alluding to, the market is starting to implode because of this one listing. Now, maybe that person has more. Maybe they've been watching the market really carefully, but here's the problem. Sometimes the temptation is to look at one, data point and then to assign, a trend to the entire market based on that one thing. And I don't think that's fair. That's sort of like going to the mall. If I saw one person wearing overalls, that doesn't mean overalls are back in style, unless I start to see a trend. So look for a group of listings that aren't selling before saying that. So anyway, I hope that didn't get weird with overalls. I never wore them. I was never cool like that. Couldn't pull it off. Anyway, be objective and don't impose headlines on the market. This is really key, guys. There are some glaring red flags in the future for the economy and all the mess of what's happening with lenders in the secondary market, but we still have to be objective. And I would say look to the neighborhood for the market trend. Okay, we don't want to read a headline in the SACB or Business Journal or the LA Times or Market Watch, whatever the source is, and then all of a sudden impose that headline on the market. What we want to do is to look to neighborhood data and go, well, what's happening here with prices? And if we see that, sales and pendings and listings are all at about the same level, then we'd go, gosh, the market is stable here. Even though I'm so tempted to say that the market is tanking, we've got to listen to the data. Or if you see a neighborhood where the pendings are going up, then you go, well, this doesn't make sense, but I'm going to have to call the market increasing. If you see a neighborhood where a different price range, maybe the market is going down. So take an honest look at the data. Buyers are picky about staying in contract. I mentioned that before. The market can be different by price range or price segment or area. And so what's happening in one neighborhood might not be the same thing in a different neighborhood. Okay, and remember the low end of the market. Okay, the entry point to every neighborhood, whatever that price range is the most aggressive portion of the market. Okay, one thing to watch is property tax appeals are going to increase. People don't care about their property taxes. They pay very little attention until the market changes. And so we've had 8 years of price growth, and now is a season where come July in the Sacramento area, that's when you can start appealing your property taxes. A lot more people are going to appeal because they're pinching their pennies and they're saying, I need to look for ways to save money. Okay, be careful about companies who are sending out letterheads already saying we're going to help you appeal. Don't hire them, especially right now, because you can't even start the process until July. Most counties in the region go July through the end of November or December. Placer County goes July through mid-September. That's the appeal season. Okay, so take advantage of that. If you have questions about that, I have a ton of articles that I wrote about 10 years ago there, to help educate you. Energy loans are more of a sore thumb right now. I've heard about several escrows. Not that they were appealing before when there was a white green loan or a PACE loan on file, because not all buyers want to assume that loan. Okay, the seller made a decision a few years ago to get a $30,000 loan for energy upgrades. Buyers don't always want to assume that and pay for that. Okay, and so I feel for sellers, but the reality is that in a market that is changing right now, in a market where buyers are becoming more finicky, I would expect for these types of loans to have more issues with buyers assuming them automatically. And so sellers, I know that's hard, but you got to be real about the market that actually exists. Okay, watch before coronavirus data, during coronavirus pandemic, and then post-pandemic data. Okay, so we're going to have three different data sets, and as we're looking at neighborhood sales and listings and such, we're going to have to ask the question when we're choosing comps, when did this one get into contract? Okay, because it might speak to a market that was higher, or a market that was different, or a market that was subdued, and so we're going to have to really look at all of these three categories. Okay, I would say expect, if you work in real estate, for 40 to 50% less business this year. At least for, during the pandemic. We'll see what happens afterwards. But if we're seeing 40% less pendings right now, then that means that there's, in a few months from now, we're going to see that much less volume. Okay. And so that's why I keep saying exactly what Mike Del Prete said. It's a market to remain standing, and instead of a market to absolutely thrive and have your best year ever. Okay. Now, if it ends up being your best year ever, fantastic. That's great. But otherwise, I think we look at the numbers and the writings on the wall going, okay, I need to crush it. I need to serve more than ever. I need to really stand out and be an excellent resource for my clients, okay, and meet their needs. Lastly, be safe and cultivate peace. Okay, that's the most important thing right now, guys. Let's try to cultivate even joy during this time. Okay, I know we're getting used to it in some regards, sheltering in place, but let's thrive personally, even if the market is changing around us. Okay, so anyway, I guess I didn't have my last slide today. Here's me at sacramentoappraisalblog.com. If you have any questions, let me know. Let's keep the conversation going. If you like this, give it a thumbs up. Thank you so much.